Alrighty, guys, so there's a couple companies that reported earnings this morning that I want to break down in this video, and all of them are pretty much doing very well, and I think one of the companies is reporting earnings after the bell today, which we're also going to talk about later in the video. So if y'all find value, all I ask is to hit that like button and subscribe, and maybe there's one more thing to ask. If you guys want some free money and you want to help out the channel, use those links down below from Moomoo and from Webull. You get 12 stocks from Webull and 15 stocks from Moomoo. Again, link down below, and with that being said, cheers, guys. Let's dive into it. So the first company I want to break down in this video, guys, again, all of these are reporting earnings, whether it's after the bell or they already reported earnings. In this case, the first one already reported earnings, which is Spotify, ticker symbol SPOT. And look at that stock go, guys. It is up almost 6% right now, up $7.50. And the stock is breaking out completely. Well, it has been breaking out completely here on the 4-hour chart for quite some time. You guys can see we just hit a high at $145.88 earlier today when the earnings actually came out, and now we're at what, 139. So we are down a little bit from the open where we hit that 145 high. So we are down roughly, let's see, about 4% from that high, meaning at one point we were up a whopping 11% after these earnings ended up coming out. So let me actually see. And wait a second, did these earnings come out after the bell yesterday? Actually, no, it was pre-market today. Either way, Spotify just reported earnings. Their stock is up. So let's take a look at it. So it looks like here they ended up doing $3.04 billion of, euros of revenue, as the company, if you guys didn't know, is not based in the U.S. I forget exactly what country it's based out of. Let me look it up here. I think it's Switzerland or Sweden. Let me look it up here. I'll get back to you guys. Yeah, the headquarters is in Stockholm, Sweden. Yep, that's what I thought. This company was founded in 2006. Fun fact, if you guys didn't know. But anyway, they did 3.04 billion euros of revenue, and they lost roughly $1, or rather 1.16 euros. So they are losing money, as the company, of course, is investing heavily within the business, and they're not focusing really on profitability at this point in time. And it looks like here they see Q2 total monthly active users of 530 million, which is good. Their gross margin for Q1 was 25%, free cash flow of roughly 57 million euros in Q1, and premium revenue was roughly 2.71 billion euros in Q1. So a lot of their revenue is coming from premium revenue, and it looks like here monthly addition or monthly active user net addition was 15 million above guidance, which is great. Our highest, or their highest, Q1 ever, and 5th quarter in a row of accelerating year-over-year growth, which is great. Again, this is a growth company. They're focusing on growth, which is why they're not profitable right now, which I'm all good with, guys. That's awesome, as again, the company is focusing on growth. And that monthly active user number of 515 million was up 22% year over year, and premium subscribers were 210 million, up 15% year over year. So pretty impressive growth numbers here on for Spotify, and for the stock to go up another 6%. And again, at one point it was up 10% after already being up a ton over the past couple of months. That's a great sign for investors. Again, considering the stock was already up a ton, now it's up even more after earnings. That's a very good sign that the company is doing very well and their strength overall in the stock. I mean, that's great news in my personal opinion, right, guys? So at this point, we're at a fresh high on the 4-hour chart. Maybe not an all-time high, probably nowhere close. Yeah, what am I saying, guys? All-time highs were at $400 almost a couple of years ago. When was that exactly? Back in, about 2 years ago, back in February of 2021 is when we hit that all-time high. So now Spotify's clawing its way out of the hole that it got itself into. I mean, the stock went from 385 all the way down to $70. That is a big drop. So now it's slowly climbing out of that 80% hole. And what I'm actually noticing here, guys, on the 4-hour chart, or actually no, this is the 3-year chart. My mistake, guys. We have an inverse head and shoulders. Do you guys see that here? We have the left shoulder, boom. We have the head right here, boom. You guys see that? Now we have the right shoulder starting to form on this time frame, and again, we're breaking out up 6% on the day. At one point we were up 10%, so pretty impressive numbers out of Spotify. Very good growth for the company, and it seems like, again, on that 3-year chart and on the yearly chart, we have that inverse head and shoulders is playing out, and there could be more upside on the stock in the short term. The second one that I want to break down, guys, is PepsiCo, which is up another 2.2%, which is actually just now at a fresh, it just hit hit a fresh all-time high at 190 bucks per share, which is very impressive, guys. And right off the bat with Pepsi, guys, I think this stock is very overvalued. I mean, if we're looking at it for a long-term investment here, it's overvalued. You know, point blank period, it's overvalued. Same with Coca-Cola and a lot of these other safe, you know, defensive stocks, whatever you want to call them, consumer staples. I think they're very overvalued, but it just keeps on trucking along. Again, this company reported earnings this morning and their stock is up 2.2%, all-time high, and now we're at the top of this channel, which is pretty freaking nutty considering just a couple of weeks ago we were at 170 bucks. Just about a month and a half ago, the stock was at what? 170 bucks. Now it's up to 190. It is up 11-12% during that time period over the past month and a half. So PepsiCo ended up doing, it looks like here, EPS of $1.50, which beat the 139 estimate, so that's good. And sales came in at $17.85 billion, which beat the $17.22 billion estimated. So they beat EPS, beat on revenue, and they now expect their full year 23 revenue to increase by 8% versus the 6% prior, the prior estimate. So that's good. And anything else here on estimates? It looks like here they see 2023 core EPS of $7.27 versus the $7.26 estimate. That's pretty good there. And coming up a little bit more, anything else here? Looks like Wedbush reiterates the outperform on PepsiCo, maintaining a $190 price target. We're pretty much at that price target right now. So guys, overall, this is breaking out in the short term, but I think it's overvalued and we do have to see a pullback. Maybe if we do get a pullback, we can catch a nice dip buy on it. But at this point, guys, I'm being cautious. But overall, great quarter for Pepsi, nice guidance, and their stock is exploding. And there's another company reporting earnings after the bell today whose stock is slowly creeping up right now, which I believe this could continue in the short term. Let's talk about that right now. But before we do, if for some odd reason you have not gone up to 15 stocks yet for Moomoo, what are you waiting for? Use that link down below or go to StasSurFest.com/Moomoo. Once you open up an account, you get 1 free share of stock right off the bat. And listen to this, if you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit at least $1,000 onto the platform, you get another 10 stocks, totaling a whopping 15 free stocks. And of course, guys, all those links down below help out the channel. This would not be possible without you, so I appreciate you all as always. And if you guys haven't gotten your 12 stocks from Webull yet either, that's also linked down below. Some more free money, so up to 27 free stocks, guys, in the description box down below. Again, I appreciate you all as always. Cheers. Now let's dive into that third stock, which is Enphase, ticker symbol ENPH. So let me pull it up and show you guys what's going on with Enphase. So right now it's up 0.1%, and like I said, we could be gearing up for a big move here after the bell. We'll see, as they're set to report earnings in a couple of hours. So you guys can see Enphase, I've covered it before in the past couple of videos, but I'm going to cover it again. Enphase is up 0.1% right now, and it's slowly been reversing out of the moving averages for the first time in months. I'm talking for the first time since the middle of December, as you guys can see right here. So we already are moving in the right direction. We're above the moving averages. We have a golden cross. Now all we have to do is break past 230, which you guys can see here. That's been resistance pretty much since the beginning of February. So for a good 2.5, almost 3 months at this point, which I believe we could be gearing up for a breakout as soon as post-market today, maybe tomorrow, maybe at some point later this week, next week, I don't know. But overall, what we're seeing is, again, 230 resistance, but at the same time, in the past roughly week and a half, 2 weeks, we've been making these higher lows. Do you guys see these higher lows being made? So in other words, we have an ascending triangle forming on Enphase as well, which maybe you'll get a better look at it here on the 20-day chart. Yeah, you guys see that here on the 20-day chart. So if Enphase ultimately breaks 230, guys, we're going to see a huge move on this stock, probably to 250, 255 in the short term, maybe even higher than that. So they're looking to do EPS of $1.20 on revenue of $730 million, up 65% year over year. So a lot of these companies that are reporting, guys, their revenue is going to be declining or flat year over year, especially big tech, which we talked about more last night and yesterday in general. But Enphase, on the flip side, 65% revenue growth year over year is what's expected, which who knows if that's actually going to be the case. But again, that's what's expected as of now. So keep your eyes on Enphase today, guys. My alert's at 230. I might as well set another one at 235, which was the high from, it looks like, let me see here exactly. It looks like that was the high from back in the beginning of February. Yeah, so if we do take out 230 followed by 235, there could be a massive push here on Enphase. So yeah, guys, that's pretty much it for the video. Spotify, Pepsi, Enphase, those are 3 stocks I'm looking at right now. So if y'all found value, hit that like button. Feel free to subscribe. And if you didn't know, I have a second channel called Stas Talks Money. There goes another alert here. Stas Talks Money, which I'm doing a $100 giveaway at 1,000 subs, which we're at like 350 now or something like that. So make sure to subscribe to Stas Talks Money, link down below. And don't forget to get up to 15 stocks from Moomoo and 12 stocks from Webull. All those are linked down below as well. Check out my Patreon as well if you want. And with that being said, cheers, guys. I'll catch you later.